Good morning, everyone, and welcome to Wednesday morning. It's Stephen Whiteside here from the uptrend.com. Well, we don't have any major economic numbers coming out in the pre-market this morning. We've got energy inventories coming out later in the morning, and then we've got the minutes from the last Fed meeting coming out this afternoon. Now, right now, stock index futures are down across the board once again. The overnight session has been extremely volatile. You thought 2025 was going to be all about AI, but it's all about stupidity. And here we go once again. The US putting tariffs on China, China putting tariffs on the US. I posted a couple of links, a speech from Ronald Reagan about tariffs and a number from Warren Buffett about tariffs. And in both cases, they think tariffs are just the stupidest thing. But here we are coming into Wednesday morning. We've got gold up over $80 in the pre-market this morning. There's Ronnie speaking about tariffs. There's Warren Buffett calling tariffs an act of war, and I believe that's how the world sees it on Wednesday morning. Now, the bond market came down sharply once again on Tuesday. Now, if China wants to retaliate, they can start selling off U.S. bonds aggressively, and of course, they are the biggest foreign bond holder. And if they're selling off bonds, if bond prices are falling, that means bond yields and interest rates are going to go up sharply. And that's probably what's going to happen. And why is China going to sell the bonds? Well, they'll buy back their own stocks and try to prop up their own stock market. They've got, 800 billion people to deal with, and they're quite concerned about keeping their citizens happy. Not like President Trump. He's not concerned about keeping his citizens happy at all at the moment. Now, the fear index was up yesterday. Didn't take out the previous day's high, but closed higher on the day. And the VIX ETFs continued to move higher. So that is bearish for the stock market. Now, we've got crude oil down nearly $4 in the pre-market. So nobody's going to be drilling, baby drilling anytime soon. Of course, it's great for consumers that gasoline prices are continuing to fall as well, and natural gas prices are going down. That means the energy sector is getting crushed. In Canada, we were down 4.7% yesterday. In the U.S., it was 2.31. The U.S. market had an inside day. Of course, the bear ETFs are shooting higher, whether you're looking at the stocks, crude oil, or natural gas. They're all moving up right now. And so there's ways to make money even if the market is falling. I'll finish off this morning just looking at the Magnificent Nine, and specifically want to start off with the NASDAQ 100 ETF. We were looking to see if it would close above the previous day's high. That didn't happen yesterday, and we actually closed lower on the day, but did not take out the previous day's low. We may do that today. We're not seeing that type of action in the pre-market, but we may do it today. Yeah, you have to expect some psychological support at the $400 level. If that breaks, then 375 is our next target to the downside for the NASDAQ 100 ETF. Then looking at the Magnificent 7 ETF, it was down yesterday. Again, did not take out the previous day's low. Unlike Apple, which did take out the previous day's low on both sides of the border, Apple, of course, is a major exporter from China, and they're thinking of moving some more production out of China, out of Vietnam, and trying to keep ahead of the tariffs. Now, some of these big cap tech stocks don't have a lot to do with China, but Amazon certainly does. And Amazon was down on the day yesterday, again, not taking out the previous day's low. Broadcom, I had a lot of hope for Broadcom back here, where it traded sideways for over a week. I thought the market was going to take Broadcom back up, but it didn't happen. And here we are trading right up in the channel yesterday. So I still assume that the market really loves Broadcom, but there's not enough buyers right now at the moment. They're certainly not selling it off as aggressively as they're selling off other stocks right now. There's Alphabet having an inside day on Tuesday, no change in trend there. Then we had Meta trading up to the upper channel line before reversing. So it was looking like it wanted to close above the previous day's high, but that didn't pan out by the end of the day. There is Microsoft still holding the previous day's low, no change there. No change for NVIDIA. Now, NVIDIA got down to 87.50 the other day. And so if it wants to continue lower from here, then $75 is our next target to the downside. Then looking at Shopify in New York, I was trying to hold $75 yesterday, but we're really watching it trying to hold the $100 level on the TSX. If that breaks, then 87.50 is our next target. And then Tesla had an inside day yesterday. If we take out the 218.75, which we are doing in the pre-market this morning, then our next mathematical target is 187.50, but you have to expect potential psychological support at the $200 level. And there's Tesla on the TSX looking for a close above $24.16 on Wednesday. Not expecting that to happen. Okay, folks, that's all for this morning's presentation. Once again, it looks like the market is going to open lower with the crude oil dropping sharply this morning and gold popping sharply in the pre-market. It's a crazy world out there. Stupid has taken control, and there's not much you and I can do about it except try to make money as the market is falling. Have a great day. Next time you'll hear my voice is on Thursday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.